You are listening to Mining Stock Education.
And that's where the situation we're in right now, when we're seeing this sector rotation from these historically overvalued stock market into the historically undervalued mining space.
It is Mining Stock Education, and I am your host, Bill Powers. Thank you for tuning in. I'm speaking today with my friend David Erfle from Junior Miner Junkie with a Y.com. David, thanks for coming on the show for our monthly check-in. Well, gold is breaking through $3,000 per ounce. Some of the junior miners are beginning to get financed, and even the majors are perking up. What's your current gold commentary, please?
Yeah, it's basically, it's finally here. The switch has finally been flipped. I mean, there's all this evidence. If you've been reading what I've been writing over the past several weeks in my weekly column, basically, we're in a situation where the stock market is mean reverting to the downside, and the gold stocks are finally mean reverting to the upside in relation not only to the price of gold, but to the stock market as well. I mean, since the beginning of the year, our sector's outperformed everything. Right. I mean, you see the gold price breaking out of a huge 4-year base in relation to the stock market, in relation to the S&P 500. You see the GDX and GDXJ doing the same. They're showing a huge breakout versus stocks, and and the stock market has been led to the downside by the two sectors that have been taking away the investment capital from the mining space, and that is AI and crypto, right? We see the MAGS ETF, the MAGS ETF that represents the Magnificent Seven. It's down 20%, and Bitcoin looks like it's double topped at 108. And you see a lot of investors rotating out of those sectors, taking their massive gains, and now they're looking around for something that's going up. And I know I mentioned this to you off mic. When I came into this sector over 20 years ago, I had been burned by the stock market. I got into the stock market late. I watched all my friends making all this money in .com stocks, and I thought, well, they're idiots. They can make money. I'm an idiot. I can make money too. And of course, I got in late, and but it was the best lesson I could ever learn. I lost half my investment capital. It made me actually do some research and figure out what was going up while everything else was going down, and that was this sector. And it had really yet to be identified yet by the generalist investor, and that's where the situation we're in right now, when we're seeing this sector rotation from these historically overvalued stock market into the historically undervalued mining space.
Dave, you've been calling for stagflation for quite some time, and I've been reading some economists debate whether we're going to see a recession or even a depression. Now, if we go into more of a depression or even a kind of a steep spike low like we saw a la 2008, do you think that the gold stocks could ride at least halfway down with that before they maybe revert like they did in 2008?
Well, look, I mean, you basically have the gold price is doing really well. Now the miners are really doing well because of chaos and uncertainty, right? Chaos from the Trump administration, and now uncertainty from the Federal Reserve. I mean, the Federal Reserve is stuck between a rock and a hard place. You've heard me talk about this before. You've heard several gold analysts talk about this before. Basically, Jerome Powell came out and said last week that we're expecting stagflation. Right? They're looking at the economic activity, and now they're expecting the GDP to grow just 1.7% this year, and they're expecting inflation after the PCE index rose they're expecting it to rise to 2.8 this year. So 2.8 inflation versus 1.7 growth, that's stagflation. So you have the Federal Reserve is basically predicting stagflation, while at the same time, what's going on with Trump's tariffs and the budget deficit of over $2 trillion, that's something they can't control. So the gold price has sniffed out all this, and especially the gold stocks now, because now the miners are finally the margins are now rising faster than inflation. That was the deal before, because inflation was pretty much eating away their profits, even though the gold price was rising. It wasn't rising fast enough to beat inflation. Now it is. And now fund managers and smart money is on board with this. They see this. And if you take a look at the last time we had major stagflation, in this country, I was just a boy going through my my father's change, looking for silver quarters and dimes, and basically the Federal Reserve could have lost control of the economy. They raised rates to 20%, and the gold price went right along up with it. But they were able to do that because the debt to GDP was only 35%, and the national debt was less than $1 trillion. So they can't do that now. And as far as gold stocks are concerned, they're going to be the benefit of this because the gold price has already risen considerably, right? I mean, we've had the gold price move up from 2,000 to 3,000 in a year, and but the gold miners haven't caught up yet. And fund managers are aware of this now, and like I said, smart money is now aware of this because now they've lost their focus on AI and Bitcoin, and that they were distracted by AI and Bitcoin for so long as they kept going up and making all this money. Who cares that gold miners are undervalued? Well, now they care.
Regarding the major gold producers, Dave, many have looked to Newmont as the bellwether for quite some time. But I was thinking about this, like when I talked to you, we first chatted back in 2017. You were one of my first interviews, and you would back then talk about Bear Creek Mining as the junior bellwether. It's no longer like that now. So
Bear Creek looks like it's going to go under to me now.
So I bring that up to say, with Newmont, is Newmont really the bellwether gold major, or is it more of an Agnico Eagle, competing for that dominance?
Well, Agnico Eagle is competing because if you take a look at Agnico Eagle's stock price, it's gone up right along with the gold price. It's making all-time highs along with the gold price because they're basically the best gold miner on the planet. Their all-in sustaining costs are below 1,300, and Newmont's all over the place because they just took over Newcrest a little over a year ago, and they're still sorting that out, right? But they've done a lot of good things here. They've basically monetized their non-core assets. They told the market they were expecting to get $2 billion. Well, they got $4.3 billion. They got over twice as much as they expected, and they pay a solid dividend. They're the largest gold miner on the planet. They're the only gold miner in the S&P 500. So basically, this is the stock that your generalist investor, your generalist fund, they're going to get into first when they start, rotating their profits from the stock market into the mining sector. And so if you take a look at Newmont's stock price, look at a 10-year chart, a monthly chart. It's got this beautiful inverse 2.5-year inverse head and shoulders bottom, and it looks like it's rising toward the neckline at 55 soon. It breaks out above that neckline above 55 with rising volume. You want to see convincing volume. That'll tell you right there that the generalist investor is coming into this sector in size.
So I've heard people say, and we know that there is this way to play a gold bull market. We know the majors move, and then the developers, then the explorers, and the more speculative stocks. Some people that I've listened to are talking about, I'm going to start to rotate down take my profits from the majors and move them, downstream into the smaller fish.
Right.
But you don't necessarily play it that way, do you? From what I've heard recently.
Yet.
Not yet.
No.
Okay. Can you explain that?
No. Plus, well, I've been in the miners in my retirement account for the past several years, and it's done very, very well. It's done better than my junior account. But and by the way, I share both with my subscribers. My junior account, my Junior Miner Junkie Junior account, is associated with the service, but I also share my retirement account with my subscribers as well, and it's outperformed the junior portfolio for the past few years. But I expect that to reverse now. I expect the juniors now to be outperforming the majors in a big way, because if I take this back even further, back over 20 years ago, when I first got into this sector and I started to get into it and I really started to invest in it, I said to myself, why should I bother investing in majors? The upside, the leverage is in juniors. And I kept that mantra up until a couple of years ago, because I noticed that the market had changed. And I think we talked about that last month. But now, like I said, I'm already starting to see it. My junior portfolio has been outperforming my retirement portfolio with that's all majors and royalty companies. It's 9 majors and royalty companies, 9 separate ones, and that all pay decent dividends. My junior portfolio has been outperforming that portfolio over the past several weeks. And it's started to happen once the GDX broke out of a 13-year resistance at 43. Right. Once that took place, then that's at the same time that it took place, it's been outperforming the stock market substantially. That's getting people. That's finally getting eyes on this sector. I mean, I even heard that CNBC was forced to talk about gold the other day because it went over 3,000. Wall Street hates gold. MSM hates gold. They never talk about it. Well, now they're forced to talk about it because it's the only thing going up. So this is huge, especially that 43 level being broken above on a weekly basis in the GDX. Now we're coming up on a quarterly monthly close here next Monday, and we're also coming up on options expiration, in gold, and it's extremely overvalued on a monthly basis. I think it's over 80 on the RSI. So I'm expecting a correction here. But what I really want to see is how the miners react to this correction. Because now that all eyes, we have generalist eyes on this sector, they're wanting in. I'm seeing weakness being bought in the miners now. I'm especially seeing weakness being bought in the juniors, and especially the ones that I own and that I recommend to my subscribers. I mean, my top 10 is outperforming the stock market substantially, and it's outperforming the GDX and the GDXJ substantially this year.
Dave, you reference in every interview you do technical analysis. You self-taught yourself TA some years ago, 15 or so, 20 years ago. How important is technical analysis for you in investing in the juniors? Or is it just to discern more of a macro trend? Or do you apply it to the micro stocks you invest in?
It's important, but I don't want to get too wrapped up in it, especially in the juniors, because it's such a tiny sector, and these stocks can move so far, so fast in both directions. So I basically share I share the technical analysis on all my positions each week, updated each week to my subscribers, and I also do it for the sector. And of course, I put a lot of emphasis on it, but I don't put too much emphasis on it because anything could happen at any time in this. It's so tiny. I mean, if you take the entire market cap, if you take the market cap of the entire mining industry, it's like the market cap of Home Depot. It's small. So, but it is important. And like I said, that technical analysis of the GDX being broken out of 13-year resistance at 43, it's huge. But I also expect it, it's moved above there now. I expect it to come back and test it. But you want to watch how it tests it. It's testing it now on falling volume, which is what you want to see. And you'd like to see it hold on a quarterly basis next Monday. I mean, if we get a move below 43 and it's closed below 43 on rising volume on like maybe 40, 42 or something like that next Monday, then I'd be a bit concerned in the short to medium term. But as far as the long term is concerned, this is very important for the sector.
How significant do you think it is that President Trump is invoking the Defense Production Act to advance critical minerals projects and permitting and financing of these projects in the U.S.? Do you think this is significant? Is it going to stick?
Oh, it's hugely significant. And Canada's doing the same thing, right? I mean, in BC, they've already announced they're fast tracking 18 projects. And I think Carney came out this week and said that they're looking to fast track more projects. This is huge because this is a big bugaboo for the sector this cycle. I mean, the last cycle over 20 years ago, we didn't even consider permitting. It was never really something that factored into our investment thesis, but now it's huge with ESG and with these permitting timelines going out to 12, 15 years before something is built after discovery. I mean, it's really ridiculous how long it's taking for these mines to be permitted. But now the government is realizing this, and they're doing something about it. I didn't attend PDAC this year. I wasn't able to. I had a family commitment. But from people I talked to and from stories I read, they're tackling this problem. Government's getting on board with it, and it's showing. You're starting to see it in both jurisdictions, because the North America, which includes Canada and the U.S., they're top tier jurisdictions, right? But if you take a look at their permitting timelines, it takes too long. And if you go over to Africa, which is some of these places in West Africa that aren't top tier jurisdictions, all you need to do is ask the government for a permit, and they'll give you one. So this is what we've been waiting to see. We've been waiting to see an administration come into both Canada and in the U.S. to start fast tracking these permitting timelines, and that's what we're saying.
So I guess I'm more like, even though I'm from Michigan, I feel like I'm from Missouri in regards to this. Show me. Don't tell me anymore. You show me. So go permit Talon Metals, go permit Resolution Copper. President Trump did good with Trilogy Metals, in my opinion, in Alaska, reversing what the
Ambler Road the Ambler Road project is huge. I mean, look at what Trilogy Metals stock did. Right when it was announced, the evening of the election, when it was obvious that he was going to be announced president. I don't think the announcement was even official. Trilogy started to move overnight, and it had a huge move as soon as he was elected president officially. That stock popped. I think it more than doubled. So this is huge. We've had the Speed Act in Idaho been announced now, and these permits are going to be fast tracked now. It's going to start happening, and like you said, you want to be shown. Well, we're starting to see it. Like I said, it's happened in BC, and I think it's going to start happen in Canada, and it's going to start happening in Quebec and Ontario as well, where you'll probably see some rumblings where they're going to start fast tracking these permitting processes as well. They're already mining friendly, right? Where the government gives you a lot of your exploration costs in cash back. So all they have to do now is fast track these timelines.
And I want to see them fast tracked when it's not even a critical mineral. So, for example, the Stibnite project in Idaho with Perpetua Resources, that had antimony, which is what the government needs. So without the antimony, would it have really been approved?
Nope, probably not. It's war, baby. Antimony is needed for war. So, I mean, and then you see some other companies also finding antimony on their projects. Liberty Gold on their Gold Strike project, they found some antimony there, and they're highlighting that and drilling for antimony there, and they're also discussing spinning it off. So I mean, you want to get some critical minerals into your project to try to get it fast tracked, right?
Yeah, and in my state of Michigan, within the last month, Highland Copper actually got all their permits at the state level to go, if they get a financing package, to build a copper mine in the Upper Peninsula of Michigan. So that was good to see. But I am a little skeptical, Dave. But if it gives us, a little wind in our sails, President Trump will still be here for 3.5 years. But we just saw it reversed with the last administration. So I guess that's where I'm a little bit skeptical. And when he talks about bringing processing domestically, who's not going to resist a smelter? I remember when I bought the house I live in currently, there's a lot of aggregate mining. In fact, this is the center of gravel mining historically in the area where I live. My realtor, she's like, okay, Bill, I've researched everything around you. There's no gravel mines. There's no aggregate mining, just in case there would be any dust or noise issue. I'm like, wow, I didn't even think about, researching for that. But imagine a smelter. The resistance from the environmentalists, or even from people like you and me that just do I really want to live next to a smelter?
Right. And in China, they're building a new smelter every 6 months.
Exactly. So, and especially in Canada, even more so the U.S., are they really going to allow smelters, even though they need them, so they don't have to ship the ore to Asia? Are they really going to build it? I guess, like I said, I'm from Missouri in regards to this, but I hope they do it.
Well, you're starting to see pops in a lot of these copper juniors that are in the U.S. I mean, there's one in my portfolio Arizona Sonoran, and they're making 52-week highs now because they've got copper concentrate that doesn't need to be smelted outside the United States, and they're getting close to a definitive feasibility study, and it's a fantastic project, and it's not on federal land, so it's going to get permitted a lot quicker. So, look around for stories like that as far as the copper juniors are concerned. I've got a few on my watch list as well, because I'd like to get more exposure to copper juniors.
So Katie Hobbs, the governor of Arizona, she's more left-wing, as you know. So did that factor in to your investment thesis in Arizona Sonora, Dave? Did you factor who the governorship is, whether Democrat or Republican, when you invest in a jurisdiction like that?
I think what I looked at the most was the economics of the project, who's behind it, Rio Tinto and that Neutron process where lower grade material will be economic. They haven't got the results on that yet. I think they're close to having it where they can add that into their economic study. And the fact that it's not on federal land, that was a big one for me. And also it's, the management is fantastic also, and the share structure is still super tight.
And I'm not saying that a Democrat, you can't get state level permits under a Democrat, because here in Michigan, we have a Democrat for 2 terms. And there was, like I said, Highland Copper just got permitted. So I'm not saying that, but I do think it's less likely than some of the more Republican administrations.
Right. Yeah. I mean, I live in California here, and I wouldn't touch a junior that operates in California.
Yeah, I remember Rick Rule talking about some of his California tragedies, and he's like, this deposit was put 7 miles too far to the west.
Exactly. Yep.
So Dave, you've been at this. You've gone through a number of gold cycles. Big for your risk management is how you come up with your rules of portfolio management. Okay, and I got a lot of your rules in my head. And I don't have them on paper, but having talked to you for so many years, and what are some of the portfolio management rules, risk management, that you now have implemented that you didn't have in the last gold bull run? And why do you implement it now?
Oh, yeah. I mean, I left so much money on the table the first time around, when I got into it, because let's face it, I didn't know what I was doing. I like to use Rick Ruleism in where I was at in the beginning. In the first cycle is basically I confused a bull market with brains. And, everything was going up. So I just thought I was a genius. But like I said, I mean, that's another lesson that I learned that turned out to be pivotal down the road, because it turned into into basically my lifestyle and my living. So basically, the big one is never put any more than 5% of your investment. Let's say you have your junior portfolio, right? And you have a certain amount of money in that portfolio. You don't want to put any more than 5% of that investment capital set aside for juniors into one company. I don't care how good it looks. There's always something that can go wrong. Because there's so many different factors that could pop up that you didn't factor in. That's one of them.
And you don't let it grow to more than 15%, right, Dave? Of
exactly.
The total.
That was going to be my next rule. Once it gets to 15%, it's tripled for me, right? So I basically sell 1/3. That takes out my investment capital, and I hold the rest for a takeover, because that's the ultimate. That's the ultimate goal of each time you invest in something, right? I don't invest in something unless I see at least 3 times upside over the next couple of years. And so once it triples, I'll hold on to it and hope that it gets taken out. But you don't want it to get taken out too soon, right? I've got 2 companies now in the portfolio where I've taken 1/3 out, and I'm holding the rest for a takeover. But I also have a couple more that are close to being triples and doing the same. But a couple of them are late stage, and if they get taken out too soon, I wouldn't be happy about that either, because I'd rather see the stock go up on its own before it gets taken out at a premium. because these companies are so undervalued still. Even there's one in my top 10, Montage Gold. We've got a quadruple on it now, and we've taken our investment capital out, but there's so much more upside in the stock, I believe, and I just don't want to see it taken out too soon.
And when you believe the gold bull market is confirmed, or like a strong uptrend is initiated, like now, do your guidance rules for your portfolio, do they flex a little and get a little bigger, and you're willing to take on a little more risk?
Yeah, a little more risk, yeah. But yeah, like there's two stocks in the portfolio now that they're close to coming back to what I paid for them, but now the company has had to finance. They've had to announce placements and financings, at lower levels, to where the stock is pretty much the share structure is pretty much blown out and has too many warrants. That's limited the upside. So basically, when I got into the stock, it had at least 3 times upside potential. But the bear market in the junior space over the past 2 years has forced these companies to raise money at lower levels, over diluting the stock. So I'm waiting for these, and I'd say they're about 25-30% away from reaching my average cost. So when they reach my average cost, I'm going to go ahead and sell them and use that money to get into one or two companies on my watch list. I also have a watch list of 20 companies. So I invested in 20 companies, and I have a watch list of 20 companies. And I keep up with these 20 companies on the watch list. And once it gets close to where I'm about to make a decision into getting into one of them, I will, what I've done lately is I've set up one-on-one meetings with management to do some more due diligence on the companies, to make my choice on which one I'm going to get into. So, like I said earlier, I'd like to get into one or two more copper juniors. And there's a couple of copper related juniors, and there's also a couple of gold related juniors that I like. So it all depends on once these stocks have reached my average cost and I sell them, where these other stocks are on the watch list to make my decision. It's, there's so many things that factor into where I make my decision, right? Has the stock already run too much? Is it still under the radar as far as the sector is concerned? Because a lot of these stocks are still under the radar, even though the sector is breaking out. So you really rather get into something that's under the radar, that you feel that, hey, management's onto something here. I really like management. I like what they're doing. They're participating in the financings. Let's say maybe they're raising money. They don't have to issue a warrant to raise money. That's a great thing, because the stock has just gone down to factor in that raise, but they didn't have to offer a warrant. So that's very positive. You're able to get into the stock cheaper, and the street likes it. And the project is good. You've done the due diligence. You see the upside potential. You see it as blue sky potential. You see that the company's doing all the right things. They're raising money at the right times, or whatever, what have you. I mean, there's so many things. Like I said, you have to look to do your due diligence. Just sharpen your pencil and just look at all these things. And you've had so much time over the past year or so to do that. And I've done that for myself and my subscribers, and we've been handsomely rewarded. It's, like I said earlier, in the J&J top 10 is doing very, very well.
So before a company, you said, goes from your watch list to a recommended stock that you invest in, you do a call. But how many calls on average would you say you do before even that point? Like 2 calls, even before the 3rd call, moving it from the watch list to investing?
Yeah, I'll do a call before I put it on the watch list. Okay, I like what I heard. I'll go ahead and put it on the watch list. And then, like I said, now that I've got these 2 companies, these 2 stocks that are about my average cost, that I'd like to rotate into something else, because their upside is no longer there. Their leverage is no longer there. I still expect the stock to get back up to my average cost, but I don't expect a triple now within the next 3 years, because, like I said, these companies now, their share structure has been blown out. So basically, what I'm doing now is I've set up a call. I've already talked to 2 companies. I've got calls set up for 2 more.
So you're looking to buy.
Yes.
But you're going to buy with the capital that you're going to rotate out of some underperformers.
Yes.
Okay. Dave's website is juniorminerjunkie.com. Go over there, check it out. He has a free Friday email list if you want gold commentary and commentary on the juniors. And if you need specific guidance and want to look over his shoulder to see how he navigates the junior gold sector, go to juniorminerjunkie.com and you can see Dave's subscription service there. Dave, as always, appreciate your insights. Thanks for coming on the show.
Absolutely. Always a pleasure, Bill. Thanks again for having me on.